Hi, I'm Sandy Bodkin, CPA, tax attorney, and former trainer of IRS attorneys nationwide. And I'm also the author of the best-selling book, Lower Your Taxes Big Time. You know, most people think that the most audited area is home office. That is not true. The most audited area is automobile. And the reason for that, it is a big ticket item, it's the most used, and it's the most abused. If you know what you're doing, your car will be user-friendly. Otherwise, your car will be user-hostile. Now, what are the rules for writing off automobile? Especially if you use the actual method. There are limitations on depreciation. You know, prior to 1984, you could write off any car over 3 years. And I'll never forget, I used to clip out all these ads from the Wall Street Journal, and the ads said things like, buy a Mercedes, buy a BMW, and eliminate your taxes. Of course, you also eliminated your cash. Well, here are the new rules. It's this year, you can write off, if you have a brand new automobile, you can depreciate your automobile up to $11,160 in depreciation in the first year. In the second year, you get a maximum depreciation of $5,100. In the third year, it's $2,950. And then you get $1,875 per year thereafter. So for example, let's say you bought a car for $40,000. It just takes you roughly 16 years to write it off. Hey, they say cars will last longer. We'll find out. Now, that's the normal rule for most vehicles, for most passenger automobiles. There are some exceptions, however, where you can get a tremendous deduction up front for a lot of the depreciation. One of the exceptions applies for this year, which is 2012 at the date of this taping. If you buy a brand new SUV, and by the way, a definition of an SUV is a vehicle that carries passengers, has a truck chassis, and a gross vehicle weight of over 6,000 pounds. So if you get a new SUV or a new truck with a gross vehicle weight of over 6,000 pounds, or a new van with a gross vehicle weight of over 6,000 pounds, or a used truck that has a gross vehicle weight of over 6,000 pounds, but used trucks also have to have a 6-foot cargo area or bigger, whereas the new trucks don't. So if you meet any of those categories, new SUVs, new trucks with gross vehicle weight over 6,000 pounds, new vans, or a used truck with a 6-foot cargo area or bigger, you may elect to depreciate up to 50% of the business use of those vehicles. In addition, you can depreciate the remaining 50% over the next 6 years, with this year being one of them. So let's take an example. Let's say I buy a brand new Cadillac Escalade, which a lot of accountants are buying these days, for $60,000. And I use it 90% for business. So 90% of 60 is $54,000. That would be my business use. I can elect to write off 50% this year, or $27,000. The other 27 gets depreciated over 6 years, with this year being one of them. Not bad. Now, if you buy a used SUV, then you're limited to $25,000 of write-off. So you can write off, you can depreciate the business use of that SUV up to $25,000 in the first year. So the winners are new SUVs, new trucks, new vans, used trucks with a 6-foot cargo area or bigger. The second winners are used SUVs, and everybody else are basically the losers, the Hondas, and even the Priuses, even those cars that give 50 miles to the gallon. And then Congress wonders why Americans are gas guzzlers. Well, the tax law encourages buying heavy metal cars. By doing this, you will get a tremendous increase in your deductions over buying, say, a Honda, and that'll make your life a lot less taxing.